Now the real action starts. That's the Nifty. In last 1 year, markets have seen no change. The difference is that in the run-up to the 2021 budget, 2022 budget, the market expectations were extremely high. But now expectations this time around are very low. And the levels have not changed at all. The small cap index in last 1 year, just no expectations. So can I say that this time around, even though nothing has changed in terms of an global environment and the positioning of the government, expectations are the lowest you've seen in a long, long time?
Yeah, Nikunj, I completely agree with that. So as we know, market works from euphoria to despair. So similarly, the sentiments work from huge expectations to extremely low expectations. So I think this time there is fear. What will the government do? Will it be totally socialist? Will it increase the capital gains tax? Will the structures change? So no one expects anything positive. So as far as my understanding goes, so to that extent, even if, let's say, hypothetically something negative comes, I think its impact will be limited to a few days. And on an overall basis, I think we are very well positioned as an economy. So markets, in my view, in 2023 will do well irrespective.
Okay, now let's look at the budget stocks. What we've done is that purely looked at 10 stocks, which in a sense really could be the budget theme. Push on energy, push on infrastructure, ITC, RIL, L&T, Tata Power, Maruti Suzuki. That's the lot number one. Out of this lot, which to your mind could be the budget stock? Let's go back to the lot one thing, please.
So I think from the previous wall which we saw, I think L&T will should do well, because as it is, they are doing well, and if at all there will be a positivity due to the budget because the capex theme continues. And in my view, the government should do something for consumption. So I expect that, see, private sector capital investments has started. So government doesn't need to support as it used to earlier. But consumption has been hit by the high inflation. So they need to boost consumption. So the best way to do it is to reduce taxes, at least for the middle class. So if they do that, I think the consumption stocks do well. So I think Maruti will do well.
Okay. So your budget pick, first and second would be L&T and Maruti.
Yeah, from these 5 stocks.
Let's look at few more stocks. And these are 10 stocks which we've identified, which at least we feel that there could be a little bit of budget impetus. Hero MotoCorp, the same logic applies if there is a change in income tax rebate. Mahindra and Mahindra, again the same logic applies. But State Bank of India and BOB, PSU banks, if there is an incremental change in FPI limit, how positive that could be?
So given that these banks have already done well, so now they need a boost in performance to do well. So if there are some changes incrementally, it could be better. But I think from these stocks, my pick is M&M. So M&M I've held for a long time now. It's at an all-time high. It hit an all-time high yesterday. So I still believe that it gets advantage of a rural income resurgence. And on top of that, it's got a very strong product profile, which is also futuristic. And valuations are still not very expensive.
So I'm going to stack the stocks which Sandip has identified for our viewers, and we'll call it Sandip Sabhrwal's budget trade. L&T, it's no ITC this time, by the way. It's L&T, it is Maruti and Mahindra and Mahindra.
That's right.
Anything else which is not part of the wall, which is part of your list?
Yeah, so I think government will do something on consumption. So to that extent, beaten down consumption names, which I wouldn't buy earlier, but which are down 30-40% from the top. So let's say something like a Bata. Peak was 2,300, today it's at 1,500. So I think a lot of the decline in earnings, valuations have got corrected. So I think that's something which I'll be looking at. Then from the mid-cap infrastructure theme, something like NCC, which has been doing well, but it's not as well recognized in terms of its valuation boost. So it still trades at 5-6 times earnings, so that could do well. And I think if something happens on the consumption side, we will see some of the durable names which have got beaten down could also come back. Something like a Voltas, Havels, which are down, like Voltas is down 40-50% from the top, Havels is down 30-40%. So I think these are things which people should have a look at on.
So Sandip, I'll request you to go to the bull ring. That's where all the action is, and that's where I think Avan would also be joining you in a second now. So why don't you take your seat there? Thank you very much, and it was quite a grand welcome, Sandip Sabhrwal, I must say. I want to just recap the 3 C's, which we at ET now, in a sense, are calling as the theme of this budget. the three C's. Consolidation, which is looking at how there are global uncertainty. 2023 at a global level is not off to a great start. It is going to be a fight and a toss-up between inflation and recession, and the global road, in a sense, has got a lot of dangerous turns ahead. The first C is to maintain fiscal discipline. That's the first C, consolidation. Second, capex, which means the finance minister will have to walk on the path of fiscal consolidation, keep the fiscal deficit in and just below 6%, and also ensure that enough and more stimulus is given to the economy via the infrastructure route or via the expenditure route to create a multiplier effect. And then third, capital gains. Now, from a market standpoint, the view with experts we've spoken to is that India has STT, equity culture has just about started, tax collections are strong. So the backdrop for a change in the tax regime, whether it is LTCG and STG, is perhaps not there. I think that, in a sense, is going to be important from a real market standpoint. I think Avan is just about getting ready.